Well, good evening, everybody. Ron Wheeler here, manager of options trading at VectorVest, and it's my pleasure to bring you tonight's special presentation, The Psychology of Support and Resistance. So, all throughout my career, and I originally go back, of course, to technical analysis. I was an Elliott wave, Gann, Fibonacci, and I still use some of those principles in my trading today, don't get me wrong. But all the way back, even when I first started in the industry back in the 90s, people would always ask me whether it was a support level, resistance, whether that was based off of previous highs, previous lows, Fibonacci, Gann, whatever the level is. People would always ask me, well, Ron, if everyone's looking for these levels, don't they kind of become a self-fulfilling prophecy? And my answer to that is, boy, I hope so. Because if everybody starts taking action at these levels, that's a really high probability point to be looking for in your trade. So now, is it a self-fulfilling prophecy? Probably not. But these are levels that every trader needs to be watching, and there's lots of different actions we can take around these levels. That's what makes them so important to look at. Now again, going back to really whatever level you use. Now in tonight's presentation, I'm just going to talk about support and resistance based off of previous highs and previous lows. But whether you're looking at a level from a Gann fan, Fibonacci, day trading pivots, whatever levels you're using, right? The way I've always described these to people as they're kind of like a map to the market, if you will. Now, kind of like you look at a map here, and I just picked out a random spot outside of Indianapolis. Why? I don't know. I just picked a random spot, right? When you look at a map, and I'm not talking a fancy map like, my Tesla has where it's got stop signs and it knows there's traffic lights. I'm talking just a good old-fashioned map like the old days, right? You're going to look at a lot of different intersections. I don't know what the intersection of, Gray Road and Brunswick Avenue right here. Let me just put a little pen around it. I don't know what that intersection holds. Is it a traffic light? Now, if it's a traffic light, is it going to be red where I have to stop? Is it going to be green where I get to go? Is there a stop sign there? Or is there no stop sign, no traffic light? I don't know what that intersection holds until I get there and see how the traffic is. So I liken this to like a chart, right? When you look at a support and resistance level on a chart, you don't necessarily know what's going to happen there until the market does something. But don't you like to know where those intersections are ahead of time? That way, maybe you can slow down. Maybe you can spend a little extra time or give it a little bit more attention as you're trading and you're coming to these important intersections. So it's always nice to have a map of what's going on in the market. Now, let's go over to VectorVest, and I want to make sure that everybody knows how to add these to the graph. So this is the VectorVest homepage. I'm going to click on the graph function up here at the top, the graph tab. And I already have a graph loaded of IBM. Now, the layout that you use is not really important. So just, whatever layout you think you like the best, whether it's I happen to have VectorVest Simple on there, it doesn't really matter the layout. The support and resistance lines are what matter. And to add those to your graph, you go to Add Parameter. We're going to go down to where it says Technical Analysis, and I'm going to go all the way to the bottom and choose Support and Resistance. Now, I personally do not change these settings. I leave the settings as they are. So I'm going to go ahead and place a check mark for support and resistance. And then just to make it a little bit easier to see everything else, I'm going to remove all of the VectorVest Simple stuff. No stop, no RT, no earnings per share. Just a good old-fashioned graph and some support and resistance. And in fact, let's also take off the earnings button and the dividends just so we can concentrate more on these levels. Now, I do not change the settings as I mentioned. So if I right click on support and resistance and I go to change settings, I just want to show you what I'm actually using. These are the default settings in VectorVest. 300 bars, in my opinion, should never be changed anyway. 300 bars is like, a little over a year of data. So I always like to use that as my base for any technical analysis indicator. Required number of touches too. That means that anytime one of those lines come up, like you see down here at the bottom, there's 2 touches in order to draw that in there. The size of reversals, I like to use the strong only. And the reason why I don't like to change this, and again, you can do any setting that you want. I'm just kind of giving you my personal bias here. If you change it to weak, it really doesn't give you an idea of where the big picture moves are. Okay, so medium, strong, I like to see the biggest moves of the market. So I like to use that one. The size and support of resistance zone, that's just more of a picture thing, thin, average. That kind of gives it a little bit more buffer. If you go wide, you can see how it adjusts the levels a little bit, because essentially if you're using thin, it requires a smaller price deviation off the line. So I keep it as thin. Okay, I don't want it too big. I kind of want it to more of an exact nature. And then lines to display, broken and unbroken lines, or unbroken lines only. I keep it to broken and unbroken lines because, again, I want to see what happened in the past. So broken lines are perfectly fine for me. Number of lines displayed, and again, show the two closest matching lines. I don't like showing every single line out there because mainly I don't want to be overburdened by all of these different levels. So what you're seeing here is really just the default VectorVest levels. Now, again, I like using the defaults for one reason. It provides more of an independent view of what these levels are. I find in technical analysis, if I start going in there and adjusting the settings and manually changing things, you're kind of losing what technical analysis is all about. I like technical analysis, whether it's a support and resistance level, whether it's a stochastic, whatever it is. It doesn't matter the indicator. I like it to give me an independent view. If I start changing settings and things like that, what ends up happening is I'm trying to match the market to what I take of it. I'm looking and I say, okay, well, I think this is a resistance level right here, right at that high. Okay, so now I'm going to match the indicators to get to there. Okay, you're not getting an unbiased view. You're putting your own bias into it. So I don't like to change the settings. Now, I will say this. If you are the person that likes to change the settings, keep the settings consistent. So if you like to have 3 touches, or you want to use the medium reversals, stay with it. Don't go back and forth constantly. Try to keep the same settings on there. That way, you're truly getting an independent view of what the market is. Now, when it comes to these levels, okay, support is anything below the current market. So if I look at that again, that graph, anything that is below. So right now the current price of IBM is around $245, right? Any level or any line below it is support. So we've got a support level at 237. We've got an additional support level at 214. Now, resistance is anything above the market. I want you to think of that like gravity, right? What keeps you bound to the earth? Gravity. It keeps you forced down. It's pushing you back against just floating off into space, right? It's pushing you into the ground, which is your support. So, resistance levels are 248, 265. Those are the next two closest resistance levels on IBM. Now also, it's important to note, once a support level is passed, that level now becomes resistance. And if a resistance level is passed, that level is now support. So let's go back to the graph on this. And essentially what I'm saying is, at one time, this level below the market may have been resistance. If this was, and I can go back in time, right, to like, let's say here, right? That level all the way back at 237.98, at one point, that level was resistance, possibly holding the market back. Well, once it takes out that level, right, now previous resistance becomes future support. This level right here, at one time, resistance. If we pass that, and I don't know if we will, that now becomes a support level as the market goes higher. So those levels stay in effect for the 300 bars that they're displayed. Prior support is now resistance. Prior resistance is now support. So with kind of the ground rules laid out, how can we actually use these levels? What's an appropriate use here? So one of the basic ways to use a support and resistance level is we can use them as a turning point. So when you see support and resistance, I like to see the market bounce off these levels, because if it's bouncing off of support and heading back up, this can be a really good place to buy. The market's made a stand. It's hit a prior support level, and now it's rallying off that. And vice versa, if we see a resistance level where the market's rallied into it and maybe a downtrend, and is now coming back around, this could be a test, right? We rallied, the rally's over, it hit a prior resistance level, and now the market is coming right back down. These are great areas to turn into technical buys and technical sells. Now, I changed the graph over to Apple, and this is a good example of it. Now, this can be done in a more swing trading or short-term environment, or it can even be done in a longer-term environment as well. You know, taking a look at Apple, just look over here in the last couple of weeks, maybe the last month. Apple had a nice rally, it hit resistance, and now it starts coming back down. This can be a very nice swing trading level. It's hit resistance, you see the market hold, it starts coming back down, and guess what? It goes right back down into a support level. And again, if you're a swing trader, now we're starting to see a reversal and the market's starting to go right back up. These can be levels where you take a stand and say, you know what? I think that the trend is going to continue here. Maybe I think the trend is going to stop here. These are levels that we can use to form actions. Now, VectorVest is really nice for this because in the Unisearch, we actually have searches for this. So if you didn't know this, and this is kind of taking me back like 10 years ago, how I learned to use a lot of the technical scans in VectorVest. So in VectorVest, in the Unisearch, there's a Pro Trader folder. Open up that Pro Trader folder. Now there's a lot of different EMA crossovers and moving average crossovers, but in that folder also, you see a couple of scans. Breaking resistance, breaking support, breaking support. Down even further, retracing resistance, retracing support. Now, in this particular instance, this is kind of what I like to use. I like to use those retracing levels. So right now, you know, even though, you know, this is Friday, August 29th, and the market, as I'm doing this, is down like 50 points. It looks like we're coming back, doing some profit taking today of the current uptrend. Let's say we want to try to find a stock that is bouncing off a support level. Well, under the Pro Trader and under retracing support, let's go ahead and run that search. Now, the stocks that come up here are essentially all technicals, right? It's all technical charts. So it's all based on that alone. It's sorted by RT descending, but there's no fundamental basis. It's simply just a technical scan. All right. Now, the first thing I want you to do, just to make sure, over here, this is the actual parameter. Time of search, stock price split adjusted, support resistance, price is retracing from support line by 2%. So if I click on that, this is what that scan is based on. So it's always good to check that just in case it's a different setting or you have a different setting in there. This is the default settings I've used for my levels on the graph. 300 bars, check. Use high-low prices, check. Number of touches required, 2, check. Okay, this is actually using, okay, no, it's using thin. That's good. I was on the wrong one. Thin, strong, and broken and unbroken lines, 2 number of touches required. Okay, so I'm just making sure ultimately that everything is set up the same. I want to make sure that when I run the scan and I have that scan, I put the support resistance lines, everything is going to make sense. So I'm only scanning like the top 10 here. And by the way, you can increase the price. Okay, you can increase the volume if you want to, but the real reason I'm showing you this scan, this provides you a base. This line right here provides you a base of how you can add that to any of your other scans. That's the beauty here. Okay, so let's just run the scan we did, and I'm going to go ahead and click on the graph function. All right, so there's my support and resistance levels, and let's go ahead and take off the last clothesline. And again, you can see we're getting that because we're bouncing off that support level. Now, I will say this, the one thing I don't like about HCC is we are hitting another level of resistance. Now, as I mentioned that, let me bring this into the equation. This is something else I look for. I look at support and resistance as a barrier to trade entry. I do not like placing trades if the market is too close to resistance or support. And I think of it like this. Do you want to take, if you're sitting in your car, let's say you're sitting in the garage in your car is facing forward, right? Or maybe it's facing the other way and the garage door's closed. Are you going to hit the gas? No, because if you hit the gas, you're going to run into the wall or you're going to run into the garage door. You want to wait for the garage door to be open before you hit the gas because you don't want to run into a wall like this. So I call that a barrier to entering the trade. So if I look at that graph of HCC and I'm thinking, okay, we're bouncing off a support. Let me zoom in a little bit more here. We're bouncing off of a support level, which I really, really like, but now we're right into resistance. That's no good. And in fact, you could even see a couple days ago, the market hit resistance and couldn't go up even higher. So that's a barrier. I love the fact that we're bouncing off a support level. However, we're right to another resistance. I would look at a trade like this and probably pass it up. Let's take a look at what else is out there. We've got CWeb. All right, bouncing off a support level down here, and then we've got a rally up today. That looks like a little bit better graph. Now, we do have some resistance up here at the top. Okay? Now, speaking of that, what do we consider? What do we look for there? First and foremost, I got to think of that wall again, right? It's a barrier to entry, but that's also a wall. So you got to think about that. It's above the current market. That's good, but it is another barrier that we have to overcome. So that level can be used as a natural place to take profits off the table. So going back to this, let's say you buy into CWeb. Okay, this happens to be a China ETF. Let's say you buy into that and the market starts to rally. Well, this level up here at $50.80, this could be a good place to start taking some profits off the table. How much profits? That's up to you. Maybe a third. Or it could also be a place to raise your stop up a little bit. Okay? Typically what I would do back in my old day trading or swing trading days is when a market hit a big significant level of resistance, I would take a chunk of the portion off, a chunk of the position. So maybe take a third off the table. And then taking a third off the table, I would move my stop up to at least my entry point. So let's say I bought this thing today. The current price is $47.71. So let's say I bought 100 shares today. And then over the next 5 days, this thing rallies and we hit resistance up at 50.80. I could take off a third of my position and then move my stop up to 47.71, thereby making it not really technically a risk-free trade, but an almost risk-free trade. And the reason I say it's not a risk-free trade is because this thing can gap, of course, and your stop could get taken out in a gap, but you're essentially making this a risk-free trade. That's the beauty of it. So we can use those as places to adjust our stops and take some profits off the table. Okay, this one, same idea. This is Bio-Rad Laboratories. I love this. Bouncing off of a support level. Looks like we got some follow through today. Now, let's kind of talk about that a little bit. So, when do we consider these support and resistance levels either broken or held? So, I love watching for follow through. And that's all this means. Let's go back to the graph. And there we go. So what level held the support level? So, I mean, you can even go back on Bio-Rad. You can say, well, Ron, right here, that was the first bar that touched the support. That's all I care about. Did it touch the support? The answer is yes, it touched support. Just like we go back here, Bio-Rad Laboratories. Did we touch support? Yes, we touched support. That level is currently being held. Now, is that level broken? Okay, so a couple things. Let's do this. I have nothing against candlesticks, but I'm an open, high, low, close bar guy. Let's go ahead and right click, and we're going to change the graph to a open, high, low, close. Okay, so number one, I like to be kind of conservative when I talk about a level being broken. Okay, not just held, but this is broken. Let's say that you were short Bio-Rad Laboratories. The market's coming down, and right here on August 6th, we are now hitting and holding a support level. Okay, how do I consider that level broken. Here's how I consider it broken. And again, my trading, I usually use very defined rule sets. I don't like interpretation very much. I don't like, subjective things. I like hard, fast rules. So what I'm going to look for is a completed bar or candle. A bar or candle where the high and the low is below that level. Okay? The level is 266.09. So the only bar that's even close would be this bar on August 8th. The high of that bar is 266.20. This is 266.09. So by a little fraction, we are still holding on to that support level. Okay? I need to see a complete bar below that level. So if I back this up a little bit, let's go back up the graph. I'm just going to draw kind of like a line in here. Let's get rid of that last close. Or I'm sorry, let's get rid of that date line. Here's what I mean. I'm just going to draw a line. Let's say the next bar, actually it's not going to let me do that. Let me do this. Using the power of Microsoft Paint. All right, let's say that the next bar, let me grab my brush. Let's say that the next bar looks like, well, let me change it to red so you guys can actually see it. The bar comes in and looks like this. Now hopefully VectorVest will draw it perfectly straight, unlike me. But you see how there's a black space between where resistance is. I say resistance now because we're officially past it. We got a full bar below it. That right there is what I consider almost broken. Now, what do I consider officially broken? If the next bar or any bar comes in, now I don't even care if the next bar does something like this, does something like this. I'm using this bar's low as the confirmation that we have officially broken that support level. So I want a full bar, the high and low below that level, or if it's in fact of like resistance, I would want it above, okay? Then I want follow through. All I really care about is the highs and the lows. Once that low is taken out, it's broken. This low right here. So once that's taken out by that price, that level is now broken. So what you can see in that example is that we never really took that level out over the next couple of days. Okay? And then finally, we're holding it. Now, what do I consider an official hold of that level? Here's what I consider. Okay? All I want to see is a close. So the closing are the little right hash marks. That's a close, it's under. 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 These bars are all holding support. Next bar, that is a close above support. Next bar, that on the open of that day, that is your confirmation that we have now held that level. Okay, so I want to see some follow through. I want to see that follow through. And then I'll just take the graph all the way over to the end. And you can kind of see how, we hit that high up there. And now, again, we're holding that support level. We've got a close above right here. So you could actually take yesterday's bar as your official, we have held support. Now, the cool part about that is the market's down like 50 points today, but BioRed is actually up, still holding that support level. Okay, so again, how do you know it breaks support? It breaks support or resistance by a full bar, high and low, going through. It's got to have space underneath it or space above it. It's got to have some black space there or white space if you're looking at white graphs. Then you need to take out the high or the low. To hold a level, right, I don't want to take the level out. I want the bars to still be on the level, but I need to see a close above, like we saw right there. Okay, close above, and I want to see some follow through. That's it. Now you might look right here and say, Ron, how do you know that, this level didn't break? I mean, we've got a close right there. But again, remember, this is going through a level. So I needed to see a complete bar below that level. That's what I needed to see. This was still being held. We never had the full complete bar below. All right, so we're still kind of waiting and holding. Then we finally get the new close outside. We get some follow through. Market rallies up. This could be a place to, and again, if those levels are in existence right there, that could be a really good place for you to take some profits, move your stop up as the market goes a little bit further. This could be another good place to take some profits off the table, maybe move your stop up again. But this is kind of where we are right now. This could be, and I don't know if you're into this or not, but this could be kind of a place to rebuy. Buy a little bit more, add onto your position as we bounce off that support level. Okay, so those are some cool ways to use support and resistance. And again, the way that you're going to want to use some of these levels, I found these stocks basically right off of the scan in VectorVest. And that's retracing support. If you want to use retracing resistance, we can go ahead and run that search just to kind of give you an idea. This is more of something that you would use more of in a downtrend, but just kind of looking at this, let's go ahead and load a couple of the stocks. Oops, I hit the wrong button there. Let's go load some of the stocks. And you can kind of see, same idea here. This is in a down pattern. This is Grail, and the market is holding that resistance level high, and now it's starting to come off of it. Same idea here with Grind. Same idea with INOD. Same idea with Spire, and I got that last close, probably confusing things. So again, take that scan and use that as kind of guidance. So let's say you're doing, a bullish scan for premier growth stocks or something, and you want to try to find it where it's holding support. Use the holding support, retracing support. Now you can also, if you look up here, there's breaking resistance levels. So if I break resistance, and again, I just like to go in there and kind of manually look at everything, just making sure that all my settings match. These are my default settings. 300, high-low, 3 touches. This one uses 3 touches, FYI. So that might be a little bit different than what you see here. That's why I always double check. Thin, that's good, and strong. And we do broken and unbroken. So that means if I run this scan, which I will, and let's take a quick graph of those. All right. What that means is I may have to go into here, change my settings, and adjust that to required number of touches 3. Now, of course, if you want to keep everything the same, you can always go back and do it that way too. So what you can see here is we've got resistance. That was resistance. And now we've got a break of that. You can see if I zoom in, now this would have been a good stock to buy on the open today, Ambarella. Here was where we broke resistance yesterday, and now take a look today. We opened strong, market rally. Now, of course, it's down below the opening price, but there you go. Actually, wait a minute, that's not the current price. There you go. Okay. Same idea here. And same idea here. Okay, you've got that break. Now you're going to wait for some follow through. So those scans can be added as well. And of course, breaking support by 1% or 2%, it's up to you. I don't find any, advantage of 1%, 2%. Generally speaking, I like to use the least amount because it just gives me, a smaller barrier. The smaller barrier, once you're waiting for follow through, works really, really well. All right. Well, thank you for sharing this evening with me by showing you some of the uses for support and resistance. And like I said, if you ever watch some of my coaching, you'll see me always use these support and resistance levels in my trading. I like to use them as barriers to entry. I like to use them as bouncing off of support or resistance to kind of confirm my trade selection. They are great add-ons to any of the VectorVest strategies. So thanks again for tuning in. Have a great evening, everybody, and we'll see you next time.